All right. Okay, hello guys. How are we doing? Good evening and welcome to tonight's webinar. I hope you have had a great day so far and people are still trickling in. Welcome to the Learn to Trade workshop. This is going to be the last workshop for February. So I hope you are ready. How's your day been? Let me get some interactions in the chat. Those of you who are new here, those of you who are already inner circle members, good evening to everyone. All right, so let's dive right in as we wait for people to settle in. Please turn off all distractions and be security conscious. We do not need you to post your information in the chat. I want this to be very interactive, so if there's one thing that I want to request is that when I ask a question, I want you to give me your candid opinions. This class is for us to learn. All right. So it will help very, very much if you are interactive, ask questions, and also answer me when I ask questions. Okay. So let me know where you are joining from tonight. Let me know your city that you are joining, that you are logging in from. If you are in Lagos, if you are in Port Harcourt, if you are in Abuja, let me know where you are joining from. Who is this course for? This course is for primarily professionals that do not have time to trade. So that's one of the groups of people that this course is going to help a great deal. So let's assume that you are a banker, you are a lawyer, an engineer, an accountant, and you understand that there's an opportunity in the forex market, but you've not been able to carve out that time to trade, profitably. And many of you are struggling here, so this will help you. If you are not making profits, this webinar is for you. If you have been blowing accounts, this webinar is for you. If you have lost trust in the industry or you're just looking for a profitable, sustainable strategy, this webinar is for you. All right. So as always, if you stay up to 70% of this webinar, you are going to get a certificate of participation courtesy of FBS, and that will be sent immediately automatically to your inbox. All right. So the question basically that everyone asks is, who is going to guide you in this journey? If you are going to be successful in this trading venture, who is going to be your guide? Because you can get lost in the maze, in the forest, in the jungle, and people can cheat you, people can scam you. So who is really going to help you? And for the last going to on 20 years that I've been involved in the forex market, I have decided not to teach just because I didn't want to be, in the bandwagon of forex gurus and all that. But sometime last year, I decided to especially I have created results for myself. So I'm going to teach forex trading, but I'm not going to do it in the way that is currently being done. So who exactly am I? My name is Adeposi Okupe. If you are hearing me or watching me or joining me for the first time, my background is actually in architecture. I still practice. I have a property development company as well, but I'm a serial entrepreneur, as you can see. So I'm the founder of the Personal Wealth Academy, where I help people to build wealth in record time. And I'm also the founder of NoLimits Markets, which is the platform that is bringing this educational workshop to you. So I'm a certified wealth manager as well. So I have a certification from the Global Academy of Finance and Management. And that's what qualifies me to teach you about personal finance and managing your money. So why should you listen to me? Over 15 years of trading experience, I've done all the mistakes. The only mistake I've not done is probably signal trading. Yeah, because it's that one is just very obvious to me. But I've done way worse than that. Okay. I've trained over 50,000 people all across major cities in Africa, and both online and offline. And What I want to show you today is number one, how you can accelerate your capital to build wealth. If you are in Nigeria, a big issue that you have is capital for wealth creation. Okay, you know what to do, but you don't have money to do it. You want to start a business, you don't have the money to do it. You want to even give your family a good life. Where's the capital to do that? So you need capital to actually do stuff. But where do you get the capital? The mortgage is comatose. The interest rates to take loans from the bank is crazy. So I wanted to go into to property development as an architect, but where do I get the finance from? That was my introduction to this game. And I said, you know what? There has to be a way that somebody can safely build wealth, start from wherever they want to start from, and build wealth over time. And then they can start using that capital either for their lifestyle, for financial independence, or for their impact projects. If you are the kind of person that you are committed to your church, your mosque, committed to a social cause, but you don't have the finance to put your money where your mouth is, basically, this will help you. So what do you need? The right plan, you need a reliable platform. I will talk about that, and the right psychology. And as I always say, no one is smarter than you. I do not believe in the 21st century, in 2025, that the best thing to do for financial freedom is to hand over your hard earned capital, your sweat and blood, to a financial institution to manage your future for you, or to hand over your financial future to the government by way of a pension fund or a pension administrator to determine your financial future. I believe that no one is smarter than you, and whatever it is you need to learn is already available, even online, just like you are joining me and watching this video today. So no one is smarter than you. So let that be one of your takeaways from tonight's meeting. So what exactly are you up against? You're up against the institutions. As I just said, you give them your 1 million naira, they're going to make 100 million from that money, but they're going to give you peanuts, maybe 60,000 naira at the end of 12 months, maybe 6% or 4% or less at the end of 12 months. In fact, in Europe, as at 2 years ago, we had what we call negative interest, that when you put your money in the bank, they actually charge you. Instead of giving you interest, you were actually going to pay to keep your money in the bank. That was crazy, and it happens. We also have the government that taxes you excessively, and they still don't provide the basic amenities that you need for a good life. We have the economy that is shrinking. Inflation is at 33% in Nigeria. The naira is depreciating. It's rubbishing your effort. It's looking like you are not going forward. You are walking, but you're actually doing moonwalk. You know that moonwalk that Michael Jackson does. You're going backwards. And I don't know if anybody can relate. If you can relate to this type, I can relate. All right. This is definitely how I have felt before knowing what I know now. So after this training, you are going to stop blowing accounts. I know most of you have seen, especially if you are on this call, you have seen the promise of trading, the promise of financial markets, of investing, of Forex and crypto. And many of you have ventured into those things. Many of you have been scarred. You've lost money. You've been scammed. Okay, you've been dealt with. And if you've tried to do it by yourself, you've probably blown a couple of accounts. If you are here and you have blown accounts recently, type blown account, type blown account. Okay, you are going to stop blowing accounts after this training. If you blow another account again, you deserve flogging. As my friend will say, I'm going to show you how to make it impossible to blow another account ever again. Okay, and that should give you some confidence in knowing how to build your wealth. I will show you how to hedge trade like the institutions. I will show you how to turn losing trades into profit. Who would like to learn? A trade is going against you, but you can still come out of that experience with profit. You never have to close trades in a loss anymore after this training. I will show you how to trade profitably in 10 to 15 minutes a day. You are so busy, but you have to, everybody here has 10 minutes. If you take a log of how many hours you have scrolled on Facebook today, I can assure you, you will be surprised. You have 10 to 15 minutes a day to build your financial future. And ultimately, I'll show you my personal plan that I am on currently. And I'll show you where I am on that plan to trade your way to financial freedom in 3 to 5 years. My goal is not for you to become a forex professional or a trading expert. That's not my aim. I want to show you how to profit from trading. I want to show you how to build wealth with trading. It's different from becoming a full-time trader. I'm not a full-time trader, and I don't expect you to change your lifestyle just so that you can build wealth the way I'm showing you. What I want you to be, my promise is that if you follow what I'm teaching you today, you will become a smart money manager. And I feel that's a brilliant title because you are going to be, you'll be able to grow, put money in the right place that befits you, that benefits you. Okay. Put your money in a place where you are 100% in control and you are still going to outperform the biggest financial institutions or fund managers out there. So that's smart money management, especially if you're in Nigeria. You don't have the luxury of sleeping on your capital. It has to be put in the place that can give you the maximum returns. So you'll be a confident trader. For some of us here, you'll finally be able to take care of your family or provide for yourself if you are single and become an all-round success. All right, now, these are some testimonials from some of our students, and I always like to highlight this particular one. And as you can see, that we only do real accounts. So that's one of the things you are going to get here. You can see this person, he deposited $1,000 into his account, and over the course of 3 months, you can see here last 90 days, he has made a profit of $408, so which is about 33.8%. Okay, over 3 months. So that means if you take the monthly average, that is 10 or 11% per month, and that's the goal. My goal for you, everybody here, if you can make 10% per month consistently and you don't blow that account, your financial worries are over. You'll finally be able to sleep well at night. Okay, Atkins Abioye says, thank you, your strategy is working perfectly. It happens to be a type of strategy that I have been searching for years. It works in a bull and bear market. It is a superior strategy. All right, so I'm just showing you some of the testimonials that our traders have given to us. The golden question: are you trading or gambling? Honestly, most people are gambling. The fact that you can press buy or sell doesn't mean you know what you are doing. For most people, once they press buy, their heart goes into their mouth and you begin to panic. And if you are panicking after you put on a trade, it means you are gambling. Very, very straight up. I want to show you how to stop gambling and start trading confidently. And it's something I call it stressless trading. Stressless trading. So these are some of my results. And I think there are a couple of you that may know my personal schedule, how busy I am. I think I have about 4 businesses that I run apart from my other involvements that keep me busy throughout the day. But this is my personal results from my trading live account. Okay. Now you can see over 398 days, I was able to make 363%. Are you seeing that? This is just a little bit over a year. I was able to make 363%. That is tripling the account. And that was a monthly return of 12% per month. This is a statistics independently audited by FX Blue. Okay. And my second account here, which is my more risky account, I did 476% in even less. But this is an account I use for testing, so I take more risk on this account. But even if you just do 12% per month and you can do that consistently, I'm going to ask you to stay till the end of this webinar so that I can show you what 12% per month will turn to in 5 years or even just 3 years if you are consistent. Okay, so I hope you guys get the idea of what I'm doing here. It's a way of becoming financially free through trading. I don't want you to become the next guru that is just making noise on Twitter and your life is not changing. No, my goal for you is that in the next 3 to 5 years, you have solved the money problem once and for all. And this is what I'm doing. I will give some of you an opportunity to join um, my inner circle, my mentorship program. For those who are interested, it's not for everybody, and I don't take everybody as well. But I'm going to give some of you an opportunity to do that. So, what are the expectations? Expect value, jam-packed value. So, cut out distractions, as I said. If you want to get something to write with, please do, because the information is going to be coming at 100 kilometers per hour. And as I said, I will give some of you the opportunity to join my mentorship if you are that so inclined, and then make sure you are taking notes so that you can put down your questions. You can either write your questions at any point, write it in the chat, or at the end of the session, I will ask for people to ask questions if they have. All right. So, all right, let's dive into the training. So Forex is simple, but it's not easy. And the reason is because you have emotions. That's your training number one. But most people teach you to trade without your emotions. They say they want to remove the emotions from trading. And I feel that is stupid, because you are not a robot, you are a human being. And your emotions are actually your guide. Is your emotions. The reason you are panicking is because you have done something wrong. So if you remove the emotions, then what's the gauge? What's your personal gauge? Even in investment, we do what we call risk assessment, risk profiling. So yeah, we need to know what percentage of exposure is going to be comfortable for you. All right. So the same thing in Forex, but it has to be with your emotions. That's how you get. It's your personality. You can't take it out of your trading. So we're going to show you how to incorporate and integrate your emotions into your trading in a way that is, in harmony. And this is not something you can learn on just this webinar. And that's why I invite you guys to join my Discord group where I trade on a daily basis. Okay. And then it's a mentorship program, but you can join this for free. Even if you are not joining my mentorship, join the Discord, and you can trade this strategy, because I'm going to teach you everything I'm going to teach you tonight is from my paid mentorship. So this is not theory, but you can join the Discord and ask questions, and you can actually start trading before you are ready to even go further. Also, join the Telegram. That's where I make announcements, give you updates, and I also profile what I am doing with my own account, update about my personal challenge, which I'm going to tell you about at the end of the webinar. So let us start the training. We've gotten that out of the way. Let's start with some important principles for successful trading. And number one is that timing is everything. Timing is everything. What do I mean by that? If you are a busy person and you are trading on the 15-minute time frame, I've started the training. I told you it's not theory, it's practical. If you are a busy person, you have an 8 to 5, you are running a business, and you are trading on the 15-minute chart, it's likely not going to work. It's going to be very stressful, because you are going to have to focus. It's a small time frame. You're going to have to focus on that time frame and cut out distractions, which may be impossible to do during the day. And on the weekend, especially if you are trading Forex, the markets are closed. So you will be trying to squeeze out some time here and there. And I've blown accounts because of this in the past. I was trading, I was waiting for a TP, and something happened. I was trying to set my stop loss, and a call came in. I said, let me quickly respond to this, and I forgot about the stop loss, or I mistakenly pressed something because I was rushing to do. Look, the first tip I'm going to give you: move from the 15-minute time frame and trade on the 4-hour time frame. You need to go to a higher time frame. And instead of trying to day trade, you can do more of swing trading. You will make more money. Your blood pressure will go down immediately. I'm telling you. And trading can actually become more enjoyable. The fact that you are trading on the 15-minute doesn't mean you will make more money. In fact, you may be losing more money because your emotions are going to be all over the place. So let me show you what I mean by trading on the 4-hour chart. I'm going to share my screen now and then show you guys my phone. Okay. All right. Okay, it looks as if my app is hanging. I'm not sure if you guys can still hear me. Please, if you can still hear me, type yes. About that, I think there was an issue sharing my screen. So let's try again. So hopefully it works this time. Okay, there we go. All right, so can you see my phone? I'm sharing my phone screen. Let me know if you can see my phone. Okay, awesome. So this is a 4-hour chart. This is MT4 on my iPhone. You can see here it says H4. Now, what does H4 mean? It means every candle is 4 hours of trading price action. Every candle you see here is 4 hours of trading. And how many 4-hour candles do you have in a day? Can someone quickly answer? How many 4-hour candles do you have in a day in 24-hour period? Quick. How many 4-hour candles do we have in a 24-hour period? Where are the maths guys? You didn't think you were going to be doing maths tonight. If you don't know how many 4-hour candles we have in 24 hours, I doubt if you can trade. 24 divided by 4. I need interaction, guys. I need to know you are following. Azuka, all right. Mr. Azuka says 6. Awesome. So it means you have 6 4-hour candles in a day. So if I look at this candle here, this candle here is at 5 o'clock on 20. That was the last. That was when this candle started. 5 o'clock on 25th of February. Now this candle is going to end by 9 o'clock. A new candle will start. You see that? So every candle you see is 4 hours. The previous one was 1. The one before that was 9 o'clock. And then the one before that was 5 a.m. And then the one before that was 1 a.m. And then the one before that was 9 p.m. And then every 4 hours. So what do you do exactly? You open your alarm and then you set your clock. Let me see if I can show you my alarm. So if you are anywhere close to me, you would have seen this. You would just see my alarm ringing. I have a special alarm for my trading. So you can see here 10:59. So that's by 11 a.m. The new candle will form. So 1 minute before that time, I open my phone. You can see here 6:59. That's 7 a.m. Okay, let's go down. 6. So that's 7 a.m. 11 a.m. The next one is what? 3 p.m. So by 2. So I want a minute to the candle opening. I want to be looking at the phone so that I can see immediately when that candle opens and take my decision. All right. So that is 3 p.m. And then I have this one, which is 7 p.m. I switched it off because I was in church. I didn't want my alarm to ring. And then I have 7, I have 11 again. Can you see that? So every 4 hours, my phone rings and it's just telling me, check your phone. And every time I open up the phone, in 5 seconds, I know what I'm looking for already. So I know if I see what I'm looking for, I know exactly what I'm supposed to do. It's a rule-based trading strategy. It's not that when the thing comes, I start thinking, should I not? No, I know exactly what to do when I see certain things. So I open my phone, I check for the conditions in 5-10 seconds max. Once that condition is met, I know whether I'm to buy, I know whether I'm to sell, I know whether I'm to hedge, because I'm going to be showing you all about hedge trading and dollar cost average. Does that make sense, guys? Let me know. Type yes if that makes sense. So let's go back to the chart. So end screen sharing. Let's go back to the charts. All right. So set your alarm. Anybody that is busy, even the president of the country can trade with this. Honestly, I'm telling you, except you don't want to, you pay attention to it. So keep a journal. That's the last tip I'll give you. For some of you, what I'm sharing with you now will already make you profitable, will already change your trading. You will start making more profits. You will stop already. If you take what I just, this particular slide, you move to a higher time frame, you set your alarm, and then you keep a journal. What are you journaling? Your emotions, your trading setup. What did you see that made you take that trade? Did you close a trade? Why did you close? And very importantly, how did you feel when you took that trading decision? You have to log all these things, especially when you are starting out, so that you can learn. You can go back at the end of the week and look at your trades, the one that flopped, the one that worked, why, and then you can ask questions objectively. Why did this work? Oh, I was gambling here. I was in panic mode when I closed this trade. I thought it was going down. I thought it was blah blah. Panic. Oh, I was excited. I was greedy. I was afraid. I was overconfident. write those things down, and then you can go back. I tell people to do this, but most people don't. But those of you who do this, you're going to see the result. All right. So let's talk about the concepts. Okay. I'm going to teach you 4 concepts, and then I will now show you how the 4 concepts morph into a strategy, which is what I call the smart money strategy. So the first concept is hedge trading. And trust me, if you understand hedge trading, you can never blow an account again. Because some of you, when you are gambling, so you want to buy, you think it's going up, and then you put your stop loss at maybe 20 pips, and then the thing starts going down. You say, if let me move the stop loss. How many of you have done that before? Let me move the stop loss a little. Move it a little so that in case it goes back up, then it doesn't go back, then it keeps going down. They say you keep moving the stop loss until 50% of your account is in drawdown. At that point, you can't even close. You can't open a new trade. You are scared. You are angry. You don't know what to do. You say, oh, you know what? I will sell. Then the thing reverses. All right. You start revenge trading. Or you close that trade and say, you know what? I will now open a trade 2 times the size so that I will make that money back. Say now it's going down. You close your first trade in a loss, then you double the trade and it starts going down, and it goes against you. We've all been there. Buy the dip, and the dip keeps getting deeper. Okay, so Miracle understands what I'm saying. So, what is hedge trading? Hedge trading will show you how to how not to have losing trades again. I can't remember the last time I closed a trade in a loss because I hedge trade. This is what the institutions do. Do you think the institution is opening a trade with $5 million, $10 million, and they are putting stop loss? Do you think the central bank, your central bank's trade, government's trade, corporation, do you think they are buying gold and they say if gold get to 20 pip or 50 pip? No, they hedge trade. All right. And I'll explain what hedge trading means. Hedge trading will allow you to ride the full length of a trade without panic. No stop loss, no take profit. And I'm going to show you. Some of you cannot believe. No stop loss, no take profit, and it builds confidence. So let me use this example to explain hedge trading. So I'll go back to my phone. All right, now this is my account, and this is a real account. Okay, so I don't use you can see real, so I don't use demo. All right, let's go back to the chart. And what I do here, so let's assume that for the sake of this example, let's go to the 5-minute chart. All right, so most of you now, you enter a trade and you say, oh, it looks like we are going up. All right, now I'm trying to do something that would help us. Let me see if we are actually. I want to see if I can do a good example of a trade that will go against me. Okay, so let me guess that this is going up. Let's just do it. So let's say I buy 0.01. All right, I'm buying. So I'm thinking that, oh, okay, break of previous structure or something, and I think it's reversal. We're at the end of the trend. I think it's going back up. So I am in this trade, and all of a sudden the trade starts going against me. Okay, and mind you, this is a real account. So what most of you quickly do is, all right, you say, I'm going to put my stop loss some pips below, maybe below the previous low, and then I'm going to target 2 to 1. So you put your stop loss. I don't want to put a stop loss, so I'll use a line. I'll use a line to what's that? Okay, so let me put a line there. So let's assume that's my stop loss. Let me make that red so you can see it clearly. All right, and then you put your take profit, say 2 to 1. So let's make that blue. All right, so this is your typical trade. Now what happens is that when your trade goes down, when your trade now goes down and touches this line, you lose the money that you put in that trade. So if that was a $10 position, this your risk is $10. If the trade, that's what you said by putting a stop loss, is that if the trade goes to this red line, take my $10. That's essentially what you've done. But do you know that any trade that goes down, price eventually goes up? If you know that this trade is going down, but it will still go back up, then why are you closing it in a loss? Because you don't want to blow your account, right? Risk management. Okay, risk management, but why do you have to realize the loss and say, take my money, I have $100, take my $10 so that I have $90 left? Is there a way that you could actually just pause the account at that drawdown and wait for the price to reverse and go back up so you can continue that direction that you were initially on? I will explain. Instead of putting a stop loss at this point, what if you said that, you know what, instead of putting a stop loss here, 2902, why not put a buy stop? So that's going to be a pending order, sorry, a sell stop at 2902. So that's going to be a pending trade right there. So let me delete this. So you can see a sell stop. It's the same thing. Your stop loss is actually a sell stop. When you place a stop loss, it's actually a sell stop. A sell stop is a pending order that says when price gets to this low level, close my buy. But for you to close a buy, you have to sell. You are selling your position at a loss. You just didn't know what you were doing. So, but why not just add on a new trade that is the same lot size as the first one? So 0.01 is your buy. Your buy is in negative, and it gets to this point, and you put a sell now in the opposite direction of the same. It has to be the same lot size, 0.01, so that if the price comes back to hit this place, you are going to have what we call equilibrium. Your account size, your account drawdown will not go up, it will not go down. Your profit will not go up, it will not go down, because your buy and your sell is equal. That's what you call a hedge. It's not the reverse. You're not reversing your trade. You are just hedging your position. That, oh, I thought we were going up, but it seems they have another plan. Okay, you know what? Let's hedge this position. You don't have to close it. And I'm going to explain what happens when you hedge. All right. But the point I want you to get is that when you hedge, so let me enter a hedge now. Let me just force enter a hedge, market sell, just to explain what happens to your drawdown. So let's close this one. Let's remove this sell stop. So apparently I'm in profit already because the trade did not go against me. But whether it's profit or loss, this unrealized amount here is going to be fixed. This is cent, so it's fluctuating, but it's just hovering around that 30 something, 40, 30 something, 40, 30 something, 40. As the sell is increasing, the buy is also increasing. As the loss is increasing, the buy is also, the profit is increasing. If the price starts going opposite direction, if the profit is reducing, then the loss is also going to reduce. I seen it. So if this is going down to 0, then this your -1 too will be going to 0. But I'm just trying to show that the account is in equilibrium. You can leave this account till thy kingdom comes, till Jesus comes. It will remain at this $0.4. The problem, as Miracle has rightly said, is that your broker will not allow you to do this. And that's why I said you have to be on the right platform. There's a right platform to hedge trade. You cannot hedge trading on a prop firm. Those guys are out there. I hope you guys know that you guys are doing prop firm. I hope you guys know that you are trading demo money, virtual accounts. That's not real money, even when you are funded, because they don't expect you to actually make it. So they're not going to give you money. They have money down. But when you eventually win and you get to a point where you can withdraw and get a payout, then there's money for them to give you. That's if you're at one of the 0.001%, no problem. Okay, but for most of you that, especially even when you are funded, you're actually trading them. So they don't expect you. They don't want you to hold a trade overnight. They don't want you to rack up any drawdown. They don't want you to hedge. They don't want you to do anything. They just want you to day trade and rack up the volume. All right, and probably blow the account. That's part of their business model, I assure you. So I don't teach you to do prop firms. You can do that, but that's not what I'm teaching you. I'm teaching you how to manage your wealth with trading. It's a very different mindset, very different objective. When you make money with your trading prop firm, instead of carrying it and putting it in the bank, all right, you can take that money and then grow it at 10% per month forever. And that's what you can do here. So I hope you understand. All right. So you can see now that the trade is going in our favor, but I'm assuming that we are hedged. You see that the profit is still around the same. So I hope that makes sense to you. Let's go back to, and then let me use this to explain this point very quickly. I'm opening this buy now, and you can see that there is no stop loss, there is no take profit. That's clear because I just opened the trades. But look at this place. There's no swap fee, there's no taxes, and there is no charges. Most of your brokers will not do this for you. They're going to give you taxes or charges or commissions on each trade. And if you hold the trade overnight, they're going to charge you swap fees. So most brokers want you to close your trades in that same day. They want you to rack up the volume. That's their business model. Are you seeing that? Especially if they're a B book broker, they will not allow you. If you are using an A book broker, then they would allow you to do something. They may allow you to do something like this. Not all brokers allow you to actually trade without swap fees and without taxes and commissions forever. And that's why I recommend the broker that I'm showing you, which is FBS, for this particular thing. We'll talk about brokers later on in the training. So let's go ahead with the slides. Yeah, so that you understand the first concept. When the trade is going against you, instead of using a stop loss, you hedge. And you can even hedge once you hedge your account, you can go to sleep. It doesn't matter where the price goes. Your profit and loss P&L is going to be fixed. You see that trade I just left? I will leave it till Saturday, which is my physical class in Lagos. And I'll show you guys that same account. You will see that it is still 0.4. It will never, if I leave it to 10 years, that's exactly why it will be. No extra charge. It will be like that. All right. So I flogged that issue. Let's go to concept 2. So you know concept 1, you can see that you don't need a stop loss and you can't blow the account because your margin is not reducing. Your drawdown is not increasing. But the hedge is temporary until you have a strategy to come out of that sequence in profit. Why do I call it a sequence? I wanted to go up. I bought. But instead of going up, the price started going down. So wahala happened. Now we are having an intervention so that we can come out of this situation in profit. And that's why I call it a sequence, because you're going to open a couple of other trades to manage your position. All right. And that's what I'm going to explain now with the dollar cost averaging. What is DCA trading? Some of you know DCA from investing. It's a strategy to manage price risk. Instead of purchasing at a single price point With dollar cost averaging, you buy in smaller amounts at regular intervals, regardless of the price. All right. So instead of buying at a particular price point, you say, I have 1 million I want to invest in gold or invest in Bitcoin. Instead of taking that 1 million, I'm explaining DCA now, and Bitcoin is 100,000, for example. You say, okay, I don't know, tomorrow Bitcoin may drop to 50,000. I don't know. It might go to 120. I don't know. But because of that risk, that uncertainty, instead of buying 1 million at once, I'm going to spread that 1 million over 10 months. And I will buy 100,000 naira every month for 10 months. So I want to acquire a position of 1 million naira in Bitcoin, but I'm going to ease in, I'm going to layer in my positions. 100,000 in January, 100,000 in February, 100,000 in March, April, May until October, so that I would have accumulated 1 million. Why? What would that do for me? It will give me an average entry price, because I believe that Bitcoin is going up in the long run. There's a fundamental bias that Bitcoin is going to be more valuable. So I just want to make sure I'm getting an average entry price, because if I buy 100,000 today and tomorrow it goes to 90,000, I will buy again. If it goes to 80, I will buy. If it goes to 50, I will buy. If it comes back up to 70, I will still buy until I have an average entry price and I accumulate my position. Can you see that the mindset here is different from the day trader that is scalping? Your institutions are in trades that they have been holding for like 3 years, and those trades are in negative, but they are patient. Maybe they bought gold at the all-time high, or they bought dollar at a particular point and their position is negative. They are waiting. They know that in the next 5, 10 years, 15 years, they can wait. It's their money. They have the money to stomach it. So that's why we say, very important, smaller amounts. This is not the time that you are trading with 1.0 lot size. This is why I'm going to tell you the kind of account that you should use. You cannot use a standard account to do this. So you must be on a cent account. Can you see that there are some things that are non-negotiables? So some of you cannot hedge trade because somebody said your brokers don't allow you to hedge. Well, you need to change your broker. You need to be on the right platform that allows you to hedge, number one. Most brokers will not allow you to hedge. They want you to blow the account. You are saying you want to hedge. Sometimes when you put your stop loss, they will still gap below your stop loss and blow the account. Then you are now saying you want to hedge. They don't want you to hedge, of course. All right. So you buy in smaller amounts. A cent account, which I will explain, allows you to have the lowest possible risk in trading. And that allows you to open smaller positions. If you're using a standard account for trading now, you're trading $100, 0.01 on a standard account, 1 pip movement is $1. That's the smallest move you can have. The smallest move is $1. So if you have a 20 pip move against you, that's $20 that's 20% of your account already gone. Most pairs will move 40 to 60 pips on average per day. EU moves 65 pips on average per day. So on any given day, you can lose 60% of your account if something goes wrong. Is that how you want to manage your wealth portfolio? You need something that can give you access to smaller amounts that you can now start layering in. So you can have many more positions. You can still have the same amount of position size, but they are going to be in smaller trades. Are you seeing that? It helps you manage your risk. I hope somebody got what I just explained. So let's give you an example of DCA trading. So let's assume this is gold, as I explained. We expect that gold will go up because there is war, because gold is a store of value, and we want to DCA trade into gold. So let's assume this is a monthly investment we are doing or trade. So let's come in January. Miracle is confused. Don't worry. Write what is confusing you and you shall be unconfused. Or maybe after this example, you will become unconfused. Make sure you're following. In January, let's say you want to buy 1 million naira worth of gold. Instead of buying the whole 1 million in January, you buy at maybe 100,000 naira. In February, the price has gone up maybe to 120,000. You buy another 100,000 naira. In March, the price has dropped below the price you initially bought. So that means your position in January and February are negative in March. You understand? But because you know that I'm dollar cost averaging, if I'm expecting that the price of gold will still go up in future, I should not panic when the price comes down short term. My interpretation will be that it's just giving me an average entry or a discount price to buy, a better entry price. That's what this means. Even though these two are in a loss, it's just in the short term. The market will still come back. Are you seeing what I'm saying? So you buy 100K. In April, it still goes down, you buy 100K. In May, you buy another 100K. Now, all your 5 positions are in loss. They are in negative. They are in drawdown. Many people at this point, they would have closed the position and say, I beg, this thing is crashing. Gold is a scam. Bitcoin is a scam. At all, I ain't bad pass. Let me take my money and go and buy Kilishi. But the patient, intelligent investor, the smart money manager, is buying DCA, better pricing. In June, the price starts recovering. July, August, September, all these months are now in profit. 3, 4, 5, 6, 7, 8 are in profit by September. January and February are still negative. By October, the old 10 trades are in profit. This February position is at break even, but all the other ones are in profit. And you can see what happened to price. At this point here, all the positions are in profit, and this man, all he did was he got a better price just because he decided to dollar cost average. So that's the second concept. I'm explaining the concepts. It's a concept. I will still show you the strategy. How do we put this into a strategy? Because we are going to morph, we weave them together. But you need to understand the concepts individually before we can now weave them together into a strategy. So, if you want to DCA trade, you must be comfortable with drawdown. Be comfortable with drawdowns. At some point, your account is going to be in red, and you must be comfortable with it. The reason you're comfortable with it, number one, you have used the right lot size, and you are using the right type of trading account. So you know that you can stomach that trade. Just the way the banks can stomach a negative position for 5 years, you can also stomach a position for 5 years, if need be. Yes, so it's just the way you do spot trading in crypto. It's just that crypto can go to zero. But generally speaking, yes, it's like spot trading. But it's not exact. Even with your DCA trade, your margin is actually reducing. We have in spot trading, you don't have margin. You understand? It's just an asset and the value of the asset. But in trading, you have a margin and drawdown to deal with. But in conceptually, yes, you are correct. So I want to explain drawdown to those of us who are trading. Even if you understand drawdown, you may not have understood it in this light that I want to explain. Because you're going to have to think like a business, not like a trader. The hedge funds, the central banks, the institutions, they are thinking like business owners, organizations, you need to start thinking like a central bank, thinking like a conglomerate, because that's where you are going. I'm going to show you how to grow your money from $1,000 to $500,000 in the next 5 years. If you have $500,000, you are a conglomerate, my brother, my sister. So, how does drawdown equate to business? Let's assume you are ShopRite and then you want to open a new store in Ikeja or in Lagos. You spend, let's say, 20 million naira to rent the store, to fix it up, and then you spend 80 million naira to stock the shop with goods. Are you in a loss because you have spent 100 million to rent the store, to fit it out, and then to stock it with goods? Is that a loss? Will you call that loss? No, it's not a loss. You have not lost it. What you just have is called inventory. Am I correct? If you are a business person in the room, what you have is inventory. It's an investment, it's an asset that you own. In investment, we can call that exposure. So inventory carries risk, but the risk is manageable because you have a bias. I'm going to sell these products over the next couple of months. So ShopRite will take an exposure of 100 million naira, and they are going to be selling the product. So in month one, they may sell, all their sales in month one can be 5 million naira. The 5 million that they make in month one, remember they've spent 100 million exposure. For them to just be in business, they have carried an exposure of 100 million. But in month one, they made 5 million. That 5 million now, is it profit or loss? Can someone answer? Is the 5 million profit? Or what is the 5 million? Because they have 100 million that they have not made. They've spent it. The money has gone out. The 5 million is what? Are they in profit or loss? Are they in ShopRite in profit? ShopRite is in profit, but they are still 95 million naira in the red. Can you see what I'm saying? So you cannot categorize the 95 million naira as loss because they are still going to make the money. They've not made it, but they just have exposure. And they cannot be in business without exposure. Are you seeing what I'm saying? And guess what? Month let's assume they make 5 million per month. In 6 months or 10 months time, that means they've made 50 million in 10 months. That 50 million, it not going to even reach 10 months. Immediately is the first month or second month, they've sold 10 million. They would take that same 10 million naira and go and buy more goods to restock the shop. Because if they are waiting to make all their profit out before they stock, nobody will come to the shop again. Are you getting that? You need to think like a business person. We're going to take this concept I just explained and apply it to the chart. The exposure that I just mentioned now is what we are referring to as drawdown. So when you see a shop that has a big exposure, it means there's big potential profit that is waiting in the future. But they must have cash flow to be able to stomach that process. They must pay rent, they must pay salaries, they must buy goods, they must restock. So cash must be coming in. So the 5 million is your small trades, the cash flow you're doing. But you still have your drawdown that you are reducing by the day, by the week, by the month. Does somebody understand what I just explained? Does it make sense? Yes. Can I get a yes? Awesome. All right. So before I go ahead, I've explained DCA, dollar cost average. I've explained hedge trading. Let me now talk about the broker. Why do I insist, if you're going to trade this strategy and if you're going to be mentored by me in my community, why do I say you must be on FBS? This is my 20th year in trading. I started trading 2005. At that point, we didn't even have Did we even have MetaTrader? Yeah, we had MetaTrader. We didn't even have mobile apps. There was nothing like mobile app, right? I mean, let me talk about the journey. Um, I've been around the block before. I and my partners settled on FBS. We have been with many good brokers, but all the stars were just not aligned. We were not just looking for a good broker, we are looking for the right, appropriate broker for what we are trying to do. So some of the stars of FBS, obviously, this is their 16th or 17th year in the business. Over 28 million traders globally. So you have the reputation. Not a Nigerian broker. It's a global broker. They're FSCA regulated. They're regulated in Cyprus, Australia, Belize, and South Africa. You need to know these things. These are things we investigate because I'm putting money. I'm building my wealth on this platform. I'm taking my account to $500,000 in the next 5 years. So I need to know that that money is safer than it is in Nigeria. Do you guys know this is on the by the side? If you have 100 million in your Nigerian account and you lose that money and the bank goes down, you are only able to recover up to 5 million, I think. The government insures you. There's something called NDIC, National Deposit Insurance Commission, to insure your money. So if the bank goes under, if you have 1 billion in that account, it's only 5 million naira they are obligated to return to you by law. Okay. And that amount was 500,000 naira just until last year. For the longest, and some of you are hearing this for the first time. For the longest time, it was 500,000 naira. Even if you have 5 billion naira in the bank, it's 500,000 naira that you get out if something happens to your money. Okay. So as of last year or so, they changed it to 5 million naira maximum for commercial banks and 2 million naira for microfinance bank. Why do I want to grow my money to 500,000 and then put it in a Nigerian bank? I need to put it somewhere. Number one is not losing value because of the exchange rates. Your money on the broker is in dollars, and even if the broker is liquidated, is because it's regulated. All right, the money is not even with the broker. The money is with the liquidity provider. That means the broker is not even the one stocking those trades. The broker is just a third party, and their money, they get liquidity from a financial institution, maybe a Barclays Bank, and they have different partners. So your money is safe. All right. And because I don't want any headache in year 3 that something happened to the broker, just be on this for this particular platform or this particular strategy. Right. So we can talk about this more, how to sign. I gave you guys the pre-workshop instructions. If you did not do them, you have the link in your email. Go to that. Douglas can also post it in the chat. It'll show you how to remove your swap fee, open the Cent account. The Cent account, you can only open it if you are using my link, the link I give to you. If you go to FBS directly, you will not see a Cent account. They don't offer Cent account anymore. But if you go through my link, that's the only way you can get the Cent account. You can try it by yourself if you can get it, but I can tell you for free you won't. So I'll show you how to download MT4, how to set up the moving averages, which I'm going to show you how we trade with, and then how to set up your statistics so that you can see. You don't need to be looking at your profit and loss. That's not where your focus should be. Your focus should be on the chart, the candlesticks. I don't look at profit and loss unless I want to close a trade. I don't care whether it's in red because my P&L is always in red because I'm always having exposure. I'm going to show you my real account now so that you understand. But the statistics helps me to see my progress on a monthly basis. So I can know that, okay, I made 10% this month. I made 15% this month. It doesn't matter how much is in the account. What matters is how much Did I grow the account this month? Is it 5%? Is it 10%? Is it 20%? Is it 15%? I want to make sure I'm doing 10% every month. So the statistics will help you to see much more than how much you made per month. You see a lot of other things. That's where we use FX Blue. So I'm going to show you how to set that up for free. And concept 3 is candlesticks and moving averages. So I've shown you dollar cost averaging, hedge trading, and the third one is candlesticks and moving averages. All right. By using candlesticks and moving averages, we're able to get 80% success rate on entries and exits. That means 80% of the time, if we say it's a buy, the market is going up, 80% of the time is going up. If we say the market is going to collapse, 80% of the time with this strategy or this concept is going to collapse. But what happens on the 20% that this thing fails? Because it's not 100%. You need to know how to manage your risk and what to do. So you can see that all this, the hedge trading and the dollar cost average, they cover up for the 20% of the time that the candlesticks and moving averages are not accurate. Are you seeing that? So I'm not here to teach you candlesticks. This is not a beginner class, but I have a free beginner course that I give to all my traders in my mentorship. So if you are planning to do that, you will get my trading fundamentals course for free, where we talk about candlesticks and all those things. But this is more of a strategy course that I'm teaching you here. And also there are many beginner courses on free beginner courses, even on YouTube you can watch. But the main candlestick that we do not trade with candlesticks. I don't say, oh, this is a railway pattern. Oh, this is a hanging man. Oh, this is a pennant, bullish pennant. Oh, this is a flag pattern. And then we sell. No, we don't make trades based on candlesticks. We only use it to interpret what the price is doing. The only candlestick that we make a trade on is the doji. We make a trading decision on is the doji. So whichever type of doji it is, once we see a doji, and I'm going to show you the strategy now. So we are going to the trading rules. We're going to the trading rules now. So this is where you may want to write down or take screenshots if you've not been doing so already. In any case, you will have the replay of this class. Let me see if our YouTube people are okay. We're still live there. Correct. All right. So let's talk about the doji rule. The doji gives us our exit rule. We have a couple of exit now. Talking about exit, how to exit a trade. We're already in a trade. So the doji is one of our exit signals. So how do we use the doji? My slide is frozen. Oh, okay. So what's the doji rule? When we see a doji at the top of a trend, we interpret that to mean that we are at the end of the uptrend. When we see a doji at the top of a trend, we interpret that to mean that's the end of the uptrend. So if we are in a buy trade and we see a doji, we close the buy trade. And if you go through the chart, and you will see a lot of dojis because of time. You can do this in your spare time, and you will see that anytime you see a doji, 80% of the time, is not 100%, but at least 80% of the time, that's the end of that trend. Okay, so let's go to the chart and let's go to the 4-hour. Let's see, what is this here? Can you see this? Can you see this? Doji, have we been in an uptrend? Can you see the uptrend? When you see a doji at the top of the trend, majority of the time. So if I was in a buy all the way up to here and I see this doji, especially when I see two dojis, I'm going to close my trade immediately. Only if the trade is in profit. Very important. I do not close the trade if the trade is in negative, if it's in drawdown. I've already shown you what to do in that case. So we only close the trade if the trade is in positive. Okay, very important. If the trade is in negative, I leave it. Let it be in drawdown. I'll collect that money later. When we see a doji at the bottom of the trend, we do nothing. I do not respect a doji at the bottom of a trend. I only take a trading decision to exit my buy in profit if I see a doji at the top of the trend. I hope that's clear. Okay. Now, the next concept is moving average. In the pre-workshop instructions, I showed you guys how to set up the 5 moving averages that we use. The 34 moving average, which is the yellow, the 50 moving average, which is the purple, the 100 simple moving average, which is the blue, and the 200 moving average, which is the red. All right, those are the first 4. These are not just any moving averages. These are bankers' moving averages. You will see that price always respects this moving average. Okay, in the pre-workshop instructions, I explained these moving averages as well and how to set them up and how we use them. So if you've not done that, go and set up the your moving averages using those instructions. Thanks, Douglas. Douglas has posted it again. So that is 4. The 5th moving average that we use is what I call the game changer. Is the 8 exponential moving average, and this moving average tells us the right time to open a trade and the right time to exit a trade. So the doji tells us when to exit. The moving average, the 8 EMA, also is our second signal moving average that tells us both when to enter and when to exit a trade. Are we getting that? Very simple. 8 exponential moving average. All the other moving averages are simple moving averages, but the 8 exponential moving average is our trigger moving average. So now, with this being said, over the next 5 minutes, I'm going to now show you how we combine all the 4 concepts I've explained to you: the hedge trading, dollar cost average, candlesticks, and moving average. Combine these 4 concepts into what we call our smart money management strategy. Are we ready? I want to get a yes if we're ready. This is the culmination of the training, and you've been here for 1 hour 45 minutes. Azuka says yes. I need energy right now. Are we ready? Let me take a sip. Okay, let's look at an example of the moving average first. What's the moving average strategy of the 8 EMA? When the second candle opens above the 8 EMA, that's our signal to buy. The second candle opens above the 8 EMA, that's our signal to enter a buy trade, or is also a signal to exit a short trade if we have a short trade that is in profit. So when the second candle opens above, we interpret that to mean that the downtrend is over and we are now going up. So if we were in a sell trade and the downtrend is over, once that second candle opens, we close our sell if the sell is in profit. If the sell is not in profit, we leave it. And then we enter a buy trade so that we can start going. 80% of the time, when this second candle, not the first, not the crossover, there's always a crossover candle that comes from one side to the other. Then there's the first one, then there's the second one. That second one is the trigger. And 80% of the time, it's always correct. Also, on the other side, when the second candle opens below those 8 exponential moving average, we enter a sell trade or we exit a buy trade if the buy trade is in profit. Very simple strategy. So when I'm telling you that every 4 hours you are opening your phone, what are you looking for? Have we crossed over? If we have crossed over, you wait for the next 4 hours. You check. Oh, did the first candle open? Okay, first candle has opened above. What are we now waiting for? Second candle, right? Very simple. So the next 4 hours, our alarm rings, we check. Second candle, is it above? If the second candle is above, that's a trigger. We enter a buy trade or we exit our short. Sometimes the first candle will open on one side and then it will go back to the other side. We cancel that count and then we keep watching. Very, very simple. All right. So now let's look at the example. I hope we got that very simple explanation. Let's look at an example. So you open your phone, you saw this long green candle. Let me close my screen now so that you can focus on the chart. You saw this long green candle. It started on one side of the 8 EMA and closed on the upper side of the 8 EMA. This is the 8 EMA here, this one. So this red is the first, and the second red is the second candle that opened above after the crossover. So that's a buy signal. So we expect that price is going up. So we bought. The price started going up, but you can see a doji here, right? So I'm assuming that we missed this doji because the doji would have told us immediately this doji closed. Exit your buy trade in profit and close it. But let's assume you were busy at work or you were sleeping. This was 3 a.m. You woke up at 7 a.m. and the price has collapsed. You can even see other dojis here that would have helped you to quickly get out. But by the time the second candle opened below, there was a crossover again back under the 8 EMA. First candle, second candle. By the time this second candle opened, your buy is already in drawdown. So some of you will rush and close it. It's already in negative. No, we don't close this trade. It's in drawdown. I've explained what the drawdown is. The reason we bought here is because we assume that the price is supposed to go up. But once the price did not go our way, what we do is open a hedge trade. So if our buy is 1.0 lot, our sell must be 1.0 lot. So we're going to open an equal but opposite trade. That's what a hedge is. If you bought 1.0 and now you are having a sell signal because the second candle has opened below, now you're going to hedge. So this your sell is not your original trade. Your buy is the original trade, but your sell is a hedge. We are putting that to protect your account instead of using a stop loss. But beyond protecting your account, this your sell hedge is going to help you make money while you are waiting for the market to come back. All right. So when we put this hedge sell, our account is in equilibrium. Then what happens? We wait. This is every 4 hours. This is almost like 5 or 6 days. We're just waiting and riding this trend, waiting for second candle to open above. Are you seeing that? At this one, it crossed over and it crossed back down. So we ignore it. At another time, we got a crossover. Then we got the red first, and then we got the green second. As soon as this second candle opened above, we take this to mean that the sell trend is done. We are now going back up. But we have made 251 pips on the sell hedge while waiting for the trend to reverse. If you use the stop loss, you would have closed your buy in a loss. But now you are waiting for the buy, is in drawdown, but you have made 251 pips. I measured this trade on the 4 hour, it's 251 pips, one trade. So we close the sell hedge in profit, and the exit for your sell is also the entry signal for the buy. So when we close the sell, we also open a new buy trade. So this is how it will look like. You have your first buy that is in negative, is in drawdown. The sell hedge, you have closed it in profit. That's 251 pips. And you have entered a second buy, which is now positive. So we are left with two buy trades. The first one in negative, the second one in positive, and that's what we call dollar cost average. Can you understand the interpretation or the implementation of dollar cost average? The price is now like a cheaper price because we are expecting the market to go back up. Now, a sequence, you see all these trades together is what we call a sequence. You started here, the price failed. Any other trade we enter in this whole experience, this situation that we are managing is the same sequence until we close out this first trade. So we are left with two buy trades. We keep waiting. We thought we were already going back up, but we saw a doji here again. This doji, you could have closed your buy, but let's assume you didn't see it for this example. We got another sell signal. Instead of closing your buy in negative, because the sell signal came below your buy, so your buy is in negative, we open another sell hedge. Now, to open this sell hedge, we now have two trades. Let's assume this trade is 1.0. This other trade is also 1.0 lots. Our sell hedge must be equal to all of the buys so that our account will be in equilibrium. So your sell hedge has to be 1 lot plus 1 lot. That is 2 lots. So we open a sell hedge for 2.0 lots so that your account is in equilibrium. And then we wait for what the banks want to do with the price. So the banks took the price down again. And then when we got the second candle above, can you see? You're just looking for what? Second candle above, second candle below. Is it a doji? And all that. By the time we had second candle above, this our sell hedge was 30 pips. So we closed the sell hedge in 30 pips profit, and then we enter a third buy because this is a buy signal. It was a signal to exit our sell, but it's also a signal to enter a third buy position, which is our DCA buy trade. We have added 30 pips to our sequence, which is now 301 pips. Are you seeing that? So now we have three trades. The first buy, the second buy, and the third buy. These are all DCA. While we are waiting for the trend to reverse, we are making money. So we are being paid to be patient. Are you seeing that? We are being paid to be patient. So we keep waiting again. While we were waiting, sorry, I think this thing reversed. Okay, so this is where we were. Third trade, we entered a buy. While we entered this buy, we saw a doji here. Now, this is not the top of a trend. This is the bottom of a trend. So at the bottom of a trend, we do not respect the doji. But it's left to your interpretation now, because I can say, okay, I don't have to close these buys that are negative, especially. But this is my third buy that is positive. Why don't I close this one in profit? Since the trend may be collapsing because of the doji. So I can close only this one by 3 because it's a small micro trend here. So I close by 3 in profit of 18 pips. I add it to my bank, my cash, and I leave the next trade to see what will happen after this doji. I wait for the next move. And as it will happen, we had a sell signal next. Can you see? And this is 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. So this is on the third day. 3 days later, you've been waiting. So can you see? So no matter how busy you are, you can do this. You saw a sell signal. Then you add up your buys. 1, 2, and you put a sell hedge. to put your account in equilibrium, and then you wait. Now, we went down, and then we had another buy trade. So what are we doing here? We are just managing the positions. We have drawdown, we are making profit, we're making cash flow, but we have a drawdown. So we had a fourth buy trade here, but by the time this buy trade opened, our sell hedge, we didn't have the opportunity to close it in profit because this buy trade opened above the sell. The signal opened above the sell. And when I calculated that distance, the drawdown was like 37 pip loss. At this point, you can decide 37 pips. Well, should I leave it? Should I close it? Because the hedge is just protection. I've made 301 pip. Maybe I should close the sell hedge. Can you see it's not a loss? You're just offloading your protection, your insurance, because you've made 300 pips. Or you can decide to leave it if you're like me. Sometimes I leave it, sometimes I close it. I'm just showing you the nuances now. So let's assume we leave the sell hedge and we enter a buy. We wait to see what the bank does. We got a failed sell. It came back. It came below the ATMA and went back above. Second candle above is another valid signal. Anytime we have a crossover and we have a second candle above, it's a signal. So now we have 1, 2, 3, 4 buy trades active and 1 sell hedge that is in negative. So we wait to see what will happen. And you can see what happened next. The buy trend eventually started going up. If you have been using stop loss all this while, oh, it's going up, stopped out. Here, okay, it's time to go up, stopped out. Here, it's time to go down, stopped out. It's time to go up, stopped out. How much would you have lost on a standard account? But you can see all the trades I closed here. All these buys, eventually, can you see that the thing went up? And you can see the doji that made me close this trade. Once I saw the doji, I said, all right, the trend may collapse and go down. So I can close all my buy trades that are in profit and look at the amount of pips I made in total by closing all these trades, including the hedges. Now, I've made 1,267 pips, but the sell hedge is still open. Let's assume I didn't close it. You may have closed it, good for you. If you didn't close it, this is your sell hedge. When I calculated it, it was about 300 pips. So let's assume I deduct the 3. I can just close the entire sequence. This is what I call a sequence. All the open trades, as long as it's now in net profit. Even if I offload this sell hedge of 300 pips, I will still come up with 967 pip profit for my trouble. And this took me maybe like 1 week. It will be more than 1 week. This was 6 candles. This is probably like 2 weeks or 3 weeks of 10 minutes, 5 minutes a day, checking, is it open? Is it above? Is it below? And 10 seconds, you've seen. Most of this trade, look at this, for like almost a whole 1 week. You had nothing to do until you got the next signal. Just checking your phone every 4 hours. Isn't that beautiful? Is that exciting, guys? I don't know. I mean, this has to be like the most stress-free, hypertension, blood pressure less trading strategy. Have you gotten value so far? I want to get some feedback. Let me know if you've gotten value so far. I'm telling you, as I told you earlier, I'm not trying to make you a professor of trading. I want to show you how to collect money from the market. That's what you should be concerned about. You know, not trying to analyze and be a professor. Most professors are broke in any case. All right, who else have you gotten value here? Miracle says yes. It's only Miracle that is on this call. So let me show you what I was telling you at the beginning. Somebody sent me this message. He said, thank you for your strategy. I joined your class on Thursday and I went back to my higher time frame. I've been making massive profits. And I said, awesome, great to hear that. What instrument are you trading on? He said USD JPY. So he's trading Forex. I trade this on gold. And if you are, I'm mentoring you on this money management, I'm going to insist that you trade gold for this strategy, even though you can use it on any asset class, even crypto. All right. VIX, indices, commodities. It works on all asset classes. However, there is a reason why I ask you to trade this on gold, and I think I will leave that reason for those who want to get into the mentorship. Don't let me give away all the value for free. Okay. So somebody else said, thank you. I've been back testing your strategy and teachings in connection with mine. This is WhatsApp message that I screenshot since 3 days ago, and it has been very helpful in preparing me for live trading again. I believe it will deal with my uncertainties up to at least 80% level. All right. And Miracle got it. The gold is forever bullish. It has only one direction to go. So in terms of buyers, long-term buyers, no matter what mistake you did, oh, I shouldn't have bought. Don't worry, just leave it. DCA. Just DCA. It will come, it will surely go up. It may take you 3 months, so it may take you 6 months. So you know that your bias is bullish. So that should give you hope that it's going down, no problem. Just be hedging and be making money as you are going down. Hedge, make money, but DCA. Hedge, make money, hedge, DCA. Offload, DCA. All right. And then eventually it will go up. But right now we are still at all-time high. Okay, we are almost out of time. We already hit the 90 mark of the chart. I will show you the last thing I promised. Who wants to see my 5-year wealth strategy with this? If you want to see my 5-year wealth strategy, type wealth in the chat. Type wealth. I charge people serious money to show them what I'm about to show you. I'm saying serious. If you come to me for my consultation, my wealth consultation, I charge you at least not less than $2,000. Not less. All right. So Einstein says compound interest is the 8th wonder. Stands it, earns it, and he who doesn't pays it. If you don't understand compound interest, and the way to know you understand compound interest is that you are earning it. That's what it says. Say he who understands it earns it. So it's not theory. If you are not earning compound interest, that means you don't understand. He who doesn't understand pays it. So most of you are paying into somebody's compound interest strategy. You are going to work every day. Is somebody's compound interest strategy. You are saving in the bank judiciously. Mutual funds judiciously. Is somebody's compound interest that you are paying. All right. So let me give you guys the secret. Let this be your friend. Please help me type thecalculatorsite.com in the chat. Let me type thecalculatorsite.com. I'll share my screen now and then we'll go over to that site. And that will be the last thing that I show you tonight. It's been I hope you guys have learned a lot tonight. So let's go to the calculator screen, calculator site. This should be your best site. In fact, any website that is not making you money is not your friend. You need you need sites that show you your future. When you come back to the site, you click on compound interest calculator. It's going to open ad. Don't mind the ad, it's free, so don't worry about it. So let's show you something first. Let's assume that you are starting. And again, I've told you guys, there's no point doing this with demo. Doesn't make any sense. This is a long-term trading strategy. This is not day trading. So you don't do demo for 3 years to find out. I don't know what you're doing. Okay. Put money into this thing. I've shown you you cannot blow your account. It's impossible with the right brokerage, with the right type of account, and with the right position size. It's impossible. Even if you make mistake, as in you make stupid, serious, foolish mistake back to back to back, you cannot blow the cent account if you use the right lot size. Okay, so let's assume you have $1,000 because you are taking this serious, and this is for serious people, please. So if that number is scaring you, I don't know where you want to start from. Even if you don't have $1,000, it's free to calculate. Assume you have $1,000. All right. If you put that money in the bank and they give you 5%, then at the end of 1 year, you are going to make $50 on your $1,000. That's annual. Inflation is 33%. So you have actually lost 28% of your money. Okay. If you put that money in your FBS account and you do 10% a month, let me show you what that. Okay, let me show you what 5% annual in 5 years looks like. 1,283. You will make $283 in 5 years. That's 28%. When your inflation is eating 33% per year. Can you see that it's not just, it's an abomination to be doing bank savings if you're in Nigeria. Let's assume that you put the money in mutual funds and you do 20% a year or 25%. Let's say 20% a year. For 5 years, your 1,000 will become 2,695. So you've done what's the rate? 169, 170% compounded growth. But inflation 33% per year. Multiply that by 5 as well. You've also eaten out about once. You are just back to normal. You are back to 1,000 or below. Minus charges, minus all those devaluation and things. What if you can do 10% per month, like I just told you? For 1 year. Just follow this for 12 months. Already, by month 8, you have doubled your investment, your capital. As in, this is getting rich for sure. Not get rich quick, is for sure. Your 1,000 will become 2,000 in 8 months. But at the end of 12 months, it would have become 3,000, 138. So already 203, 13% in 12 months. Now, remember what I showed you of my statistics. I was showing you 394% in about 15 months. So that's right about 10%. I was doing 12% per month anyway. Okay. What will happen if you do this for 5 years? What will happen if you just do this for the next 5 years? This is mathematics. This is the game of the rich, compound interest. This is the game of wealth creation. This is not bread and butter money. This is not the money you are using for school fees next year. I put $100. Let me make $50 so I can use that $50 to go and pay school fees, and then I'll use the $100, make another $50. I'll use that one to pay rent, and then I'll use another 20. Oga, that's not what we are doing. The money you are putting in this account, we are not touching this money. This is freedom account. We want to break out of financial hardship in the next 3 to 5 years. Many of you on this call can do more than 10% a month. 10% a month is like barest minimum you are learning. And if you think I'm joking, I don't have time. I will show you from my Discord. Everybody here, go to the Discord and go to the wins section. Go to the wins section of my Discord. This is Discord. Go to wins here. Oh, why is my Discord freezing? So this is one of our members, right? Look at, we even have somebody. He is making money. He doesn't even know that he's supposed to have closed. Sheriff, I don't know if he's on this call. He just kept the money there. I say, Oga, you have money in your account. Why didn't you close this? Okay, what are you waiting for exactly? All right. This is somebody else, FX Blue. This is Abdurrahim Bashir Mohammed, one of our students that joined us last year, I believe. He's made in 141 days, he's made 100%. 141 days is like 4 months, a little over 4 months. So you can see he's right on track. He's actually doing 16% per month. This is not my account. Go to the wins section, you will see people's wins. You will see my own wins. You will see my own return over the last 2 years or so on this particular account. You will see the 500 to 500k challenge and all that. But let's go back to the calculator. So $1,000 to 300,000, and this is the breakdown here. Month 1, year 1, $3,000. At the end of year 2, 9,000. At the end of year 3, 30,000. At the end of year 4, so your account is actually tripling every year. That's what it means. It's tripling every year. It's tripling every year. That's what it means. So why don't you just wait instead of withdrawing your money? Wait till 3 years, and then you can take out your initial 1,000 if you really want to de-risk. Do this for 3 years and take out your 1,000 when you have 30k or when you have 10k. Take out 1,000. But don't take out 1,000 after year 1. You have just killed your compounding strategy. Why don't you wait for 5 years and then you can take out $50,000 out of 300 and do something serious? The 5 years will pass anyway, and you are the one generating this money. Now, if you want to turbocharge what I'm showing you, you will follow my other advice. We don't withdraw out of this account, we deposit into this account. Every month, your savings plan should go here. At least a percentage of it should go here. Have a plan. I'm going to put $50 in this account every month. It's my money. It's my pension. It's my retirement account. So it's not investment. It's your money. You are keeping it in dollars and you are growing it. That's what you're doing. So put $50 from your, take 10%, take 20% for your salary, whatever income, spare money. I fund my account every week, sometimes 3 times a week. As money is entering, I take a part out. It's going to this account. It's going to this account. All right. So let's assume you add $50 every year, every month, or even $20. I mean, everybody here can do that. Instead of 300,000, you're going to have 365,000. Your total deposit will be your initial capital plus the additional deposit over 5 years is $2,200, and you have turned that to 365. I mean, what is better than this? If you did this as $50 per month savings, your future value is 456,000. What are you looking for? You want to carry your whole family to Japa? Oh yeah, they go. 5 years. Just give me 5 years and join us, and let's do this. I don't know who's going to take up that challenge. I don't know if this gives you hope that you can actually still survive, you can thrive, and not beyond thriving, you can actually be financially free. Okay, so I'm going to stop there. Any other thing you want to learn is going to be inside of the mentorship. And as I said, I'm going to give some of you an opportunity to be a part of that. So how will you feel when you have $400,000, $500,000 in your account? Because we are going to do it on this group. You can see somebody doing 16% per month. He joined this workshop just like you. What will you buy when you have $500,000? Who will you help when you have that money? If you feel, if your mind feels like this after this training, it's supposed to be so. It's designed to be so. Because I wanted to show you that this thing works both practically and with proof and mathematically. It makes sense. Okay. So as an added booster, if you're on this call, I'm inviting you. This Saturday is going to be a physical class in Lagos where we are going to go over this strategy in more detail. You're going to spend a day with me from 10 a.m. to 3 p.m. in Bagada. All right. Smart Money Masterclass. I'm going to be breaking this down, taking your questions. We're going to set everything up for you. And it's a free workshop. I'm doing this for free. So I'm inviting you guys, come, pack yourself. Make sure you are there because this is most likely the last free thing I'm doing. I was telling you today. After this one, no more free class. I've been doing free class for almost 2 years now. No more free class. I have enough proof that this works. I have the students making money, growing their accounts. So this is the last free class. Smart Money Masterclass. All right. On Saturday, I don't care where you are in Nigeria. I don't care if you're in Ghana. Make it down. If I tell you the places I've traveled just to get wisdom and knowledge, sometimes hazarded my life going just to learn something. If it takes you to be inconvenient to learn something for free that can help you make $500,000 in 5 years guaranteed, I think it's worth coming. All right. So if you go on the Discord, you will see the link. This was the last class we did in Ibis Hotel in Ikeja last year. This is where Bashir joined us, this class. Okay. So I want to give those of you, as we wrap up in the next 5 minutes, if you are serious about mastering this, I'm giving you everything, at least majority, enough for you to start trading this. If you paid attention, you can actually go and figure this out and start doing it, and you will see result. But if you want to master it for sure, especially if you are busy and you want to know that you can manage your money by yourself, I'm going to give you an offer, a one-time offer. We will not see this offer again. I will give you a self-paced course. So access to everything I've taught today and more in recorded format that you can always go back to reference, broken down in detail, in modules, and lifetime access to that. How to hedge trade like the institutions, how to trade without a stop loss, trade without a take profit, make 200 to 400 pips per trade, use the 8 EMA and make money daily, trading only a few minutes per week, maybe 10 minutes a day. That a day is even 10 minutes is stretching it. Most times 5 minutes is even too much. This is worth 500K on its own. If it can help you to make $500,000, I think it's worth more than 500,000 naira. That's the value, but I'm not charging you that. I'm also going to give you access to my inner circle mentorship, my Discord community, where we have trading support. We trade together on a daily basis. I take all your questions. You're not sure of a trade, you take a screenshot, or you have a technical issue, you have a psychological issue, whatever the challenge is, we put it there. We have weekly Q&A calls, motivation. That's worth 200,000. In the course, you will learn retail sentiment, which I didn't talk about. That's advanced. Just extra confluence to make sure that you are getting the right signals. How do you trade with cut data, commitment of traders? This is where the institutions, every week, they publish their assets. The institutions that move the market, they tell you, we are buying gold, we are selling Bitcoin, we are buying silver, we are selling euro. How do you use that to position trade and refine your entries? All right. You're also going to learn about fractals. How do you layer in, scale into positions or scale out of positions? Order flow theories. Okay. We're going to talk about that. That's what 300K. So the total value is 991,000. If I was to charge you 1 million for this, and you can make $500,000, which is like what? 800 million. That's $500,000, like 800 million naira in 5 years. Is it worth it? I think it is. But I'm not charging you 1 million. I'm giving you a 90% discount for those of you who are serious. If you are ready to stop being broke, to stop worrying about money, you want to be financially free once and for all, and have the skill to generate your own capital. This is where I'm funding my real estate from. I can generate the money for a whole project, and I can go and do it. I don't need the banks. Are you seeing what I'm saying? Are you seeing where I'm going? I'm going to give you a 90% discount and 100,000 naira. But there's a catch. There's a catch to this. I'm only going to give you the lifetime access if you buy the course between now and Friday. You have the course for free, but I'm saying the mentorship, because I didn't charge you for mentorship. My mentorship, lifetime mentorship, is what I'm giving you as a bonus. Okay? So if you pay by Friday midnight, 100,000, you will win my mentorship for that. Means you will be in my inner circle forever. And that's worth $5,000, which is what I charge my clients. So you can either pay by going to Douglas. Let me post the seller link if you want to pay with your card, or if you want to make a transfer to the Providus Bank, 100K, so we know that you are ready. There's no discount on the price of success. So I've tried my best to give you that level of discount, but this is the last time you will see this offer. Okay. Now answer these questions. Have you stopped blowing accounts? Just be honest with yourself. Have you ever made 300 pips profit in one trade? Are you set to be financially free in the next 3 to 5 years? If you answered no to any of these questions, it is already clear that the next 5 years is not going to be any different from what you're experiencing now. It is just clear. The best time to make a change, a detour in your journey, is today or yesterday. The next best time is now. So I'm only opening this up to those who are ready to take this to the next level. Go to seller. The link is in the chat, in the description, or you make a transfer to the Providus account, and then you send the proof of payment. We will add you to the inner circle and give you access to the course videos, and then you can start trading. You already know how to set up your accounts, all right, and it's just for you to start making money. All right, so with that being said, thank you so much for joining. It's almost the 2-hour mark, and we've had fun, and I hope that this has been a blessing to you. I hope that you take action. Those of you who are ready, if you are sitting on the fence, if you have any questions about the mentorship program, about the course videos, or about payment, you can ask now in the chat. I'll just give 1 minute for that, and then let me scroll through the chat so I can see any questions that I have not taken. Let's see. Glorify says, I didn't get the MA strategy. Please explain. I'm sorry, I can't do that. But you should be able to watch the replay. I'll send the link to the email. So the replay will be up for about 2 days. Miracle, how safe is this on a small dollar account, like $20 or $10? You can use this on $10 account as long as you are using a cent account, no problem. But you must know your position size. So what I do about position size is everybody that starts this trading strategy, you must start with 0.01 because you don't know your risk threshold. So start on the lowest risk, and so that you can focus on making money, on profit, the strategy, on closing trades in profit, closing sequence in profit, hedge, DCA. When you understand that with little or zero risk, it's easy for you to now start increasing your lot size. Are you seeing that? You increase your lot size up to the point where you can see that, okay, the drawdown on my account is the near 50 or 30 or 10%. I'm not comfortable with 10% drawdown. So you know that I need to reduce my lot sizes. And at a point, after a couple of months, you should know the kind of lot size that will give you the return that you want and keep you at the risk or drawdown, the exposure threshold that your emotion can take. I hope we're getting that. Does HFM sent account qualify? Well, I don't know about HFM. I do not use HFM. I use FBS, and I can give you a guarantee on FBS. I cannot give you a guarantee on HFM. I do not know if they charge swap fees or commissions or taxes. I do not know if they are A or B broker, HFM or any other broker. The reason I have told you, FBS is reliability. Reliability, when you want to remove your money, if you click deposit, in 5 minutes is in your account. Reliability. It's regulated. They've been around for a long time. It's a global broker. I have management access to FBS. Just a WhatsApp away. It's not even email. If anything happens to your account, you escalate it to me. It's a WhatsApp. Worst case scenario, I can even call direct and it will get sorted without noise. So there are reasons why I'm saying you should go this direction. All right. Okay. The sample of hedge trading shows up was an uptrend. Does this apply? Yes, the same thing for downtrend. The exact same concept. So what lot size can someone use minimum? So start with 0.01, like I said, but you can ask these questions in Discord as well. I'm always there to answer any questions, and other guys will also help you. My mom, help her clear her debt and mine. Yes, so this is how you can also clear debt and have capital to build your wealth. Okay, I'm sorry, I'm ready, but I don't have money. Yes, you get the money, Miracle. If I dangle the key to a Rolls Royce that is worth 300 million, and I say, take this key and just give me 2 million naira, no strings attached, will you get 2 million naira? How long will it take you to get the 2 million? 5 minutes or 3 minutes? I can assure you 2 million naira will come out in 3 minutes. So it's the value you place on opportunity. All right. All right. So that's where we're going to end. Thank you so much for tonight. Who's joining us tonight? Who's joining us? Remember that we're going to have the workshop on Saturday, this Saturday. Make sure you are there. Join the Discord. You will see the link to sign up for the seminar. Maybe I can post that link here as we wrap up the call. So you can copy the link and go and register if you have not registered. So that's the link for the training. All right, guys, thank you so much for joining. Have a good night. See you on the inner circle, and God bless.